Now, natural gas, let's look at two things here. It's difficult to look. Let's look at the Henry Hub futures price. How's our timing going? We've still got 7 minutes left. All right, so let's quickly switch charts here. Natural gas, where's the NYMEX price? There we go. Right, so the NYMEX has not yet rolled over. The June contract begins next week, and I hope we can get something here. Yeah, so this is the previous is the May contract, and the NYMEX on Friday on the 4-hour chart, and you can see we formed a little reversal doji candle there, and then the next candle rolled over a little bit, and we closed sort of insipidly on Friday. This is the futures at the Henry Hub. Now, if we look at the futures chart at Black Bull, my broker, they have rolled over. They rolled over on Thursday. Let's have a look at the day chart. Friday. Hang on. Yeah, Friday. Yesterday. Rolled over, not yesterday, Friday, 2 days ago. Rolled over on Friday, and that looks like a rollover candle. It's not a rollover candle. It looks like a bullish candle. It's not a bullish candle. It's a rollover, which you can't see. And if we look at the 4-hour chart, it just shows us one large candle. But basically, it moved from there to there as we rolled over. And the new contract price closed, the June contract closed at $2.67 on Friday, $2.67. All right, I'm not trading that because of the rollover that I've just showed you on the futures at my broker. So my broker is now trading the next contract, the front month, the forward month. But it has not, some of you will be trading the May contract, some of you will be trading the June contract right now, and some of you will be trading the continuous or the spot price. I switched over to the continuous price here at Pepperstone on Thursday to avoid that messy rollover, and also because I had to close this trade in a loss, right? So I closed the trade in a loss. Our last long trade was at $2.60. We had a couple of other positions above that, and my contract rolled over. I don't have a choice and this is the problem with trading futures. When the contract rolls over, your broker will close your current position and award you whatever gains or losses you have on that position. And some of the brokers will roll you in immediately into the next month's contract. My broker doesn't do that. So I'm out. I took myself out. I closed it deliberately myself. And at $2.59, I bought this contract here on Pepperstone, not a contract, an ETF at $2.59. And let's look at where we are right now. We're at $2.54 now, after dipping down to $2.50, just about. Now, $2.50 is a very key level. It's also the top of a big rollover gap that needed to be tested. We bounced off it, doesn't mean we're not going to move down. The danger here is, and I want to go back to this chart. The danger, in fact, I want to go back to the Henry Hub chart. I want to do a little, I don't want to rush through this, folks. I'm doing this for your benefit so that we're pretty clear about all of this. I don't want to, I'm looking for something on this. Yeah, no, it's not on this chart. There's a rollover gap just below where we're currently trading. I can't remember which chart it's on. I think it's on my other chart. Please bear with me. I just want to make sure I get this right. Oh, yeah, oh, there we go. Okay, so it's this pink zone. So the pink band. There's a rollover gap further down, and I can't find it now. I had it drawn in. I don't know what happened. It's somewhere between 2.2 and 2.5, right? We could get that low, although we did touch 2.5, which is the top of that gap. Maybe that's enough. I don't know. And we bounce out of there on the futures. I can't find it right here. Let's go back to the spot price where I'm trading, not the spot, the continuous. And so, as you know, this is my exact trade position. Forget all of the bump that I just talked about. Let's focus in on what I've actually done. My exact trade position on at the end of the week was here on the continuous. I took the loss on the futures contract positions, got out of those. If I hadn't done it myself, they would have done it for me. And I was fortunate enough to be able to buy this ETF at an identical price. So I didn't lose anything on the price transfer, on the switch. But we carried on moving down. And, so I bought at 259, there it is there. And we almost immediately kept on moving down. Even though we had an inverse hammer candle with a spike low, but before that, we kept moving down. So I hedged the position. So I'm now fully hedged with a tiny hedge, really, it's a few cents apart. And we're bouncing out now late on Friday. My hedge position is still in profit. But the moment we keep on moving higher, we might gap higher this weekend, like in a few hours' time. that means my hedge position will run into a loss, which I don't really want. I'd actually like this to keep moving down rather than up at this point, because I've got this long position here, which is hedged with a short position here. And if we bounce out of here right now, today, I'm going to have to take a loss on the short position and let the long position run. However, if we move down and reverse somewhere lower down, I can take profit on the short position rather than a loss, and then add to my long position and shore up that long trade for a bigger profit. So once you get hedged like this, actually, you prefer the market to move in the opposite direction to your original trade position in order to gather a sufficient profit from your short hedge to be able to turn the hedging process into a profitable advantage for you rather than a defensive mechanism of protecting a loss. That's the way I see it. I see hedges as opportunities and not protective stop losses or stop the loss. And so that's the way I do it. So if we do move down, I'll try and get some profit on the shorts and add the longs when we turn around. I have no doubt that we're going to have a sharp, short, and violent, potentially sharp, short squeeze and move up very dramatically, heading up towards 375 and 425. It's possible, however, that we may have to get back down to 220 before that happens because of that rollover gap that's slightly below us, that we touched the top of it at 2.5, the bottom of that gap, and I can't find it on my chart. You can have a look for yourself. I think I put it up on X too, is at 2.2-ish. So we may have to get that far down before we get this dramatic sharp short squeeze, or we may not. We've already had a bit of a turnaround on Friday, a nice reversal there on this continuous price at the Pepperstone ETF, and maybe with a bit of luck we'll gap up. My general idea is that natural gas is going to be bid up over the coming years as a sought after commodity. That's all. Sought after commodity in demand, with supply side restraints that are currently being imposed upon us by limited LNG capacity in the US, strikes on the South Pars natural gas fields in the Persian Gulf, and strikes on pipeline infrastructure and fields in the Russia-Ukraine region, and a continuous demand and increasing demand for natural gas against a stressed supply situation should lead to a sharp short squeeze, but we might have to wait for the seasonal advantage as well. I do believe there's some pretty interesting weather coming in the next few weeks, next week, that could push these prices up, hurricanes and so on. I don't know about the news, but we'll look at the weather forecast shortly after this meeting, after this live stream meeting with you. So that's natural gas, folks. I'm still hedged, and I'm going to have to exit this hedge anytime soon. Either if this market moves up in our favor, I'm going to have to take the hedge off for a loss, or if the market moves down against my initial position, I might be able to profit from the hedge by taking profit on the short part of this hedge trade position, lower down, and then reversing and adding extra longs onto the longs that I've already got on.
Backwardation, backtardation, contango tango. Yeah, it's the swing trade nation. I'm up pre-dawn. Coffee in a chip mug, shippers half on. Floor shout aloud to a blinking screen, but I'm zen in the mess, keep the ledger clean. Goes up and down like a yo-yo pop. Stops, hit the rocks, watch the bottom drop. Silver lost the socks, bare feet on the street. I'm chill at my desk, steady tapping to the beat. If you follow the hype, you just ain't right. Chasing every flash in that late night light. They're bragging the chat, every grab, every boast. I'm certain.